from my perspective as an investor in Asia, there's some things that you can't really change. That is, demographics and the rising emerging economies that we're seeing, including China, but across Asia. And I think you're going to continue to see a technology battle. But if you look at the base effect, the 20th century was very much America's century. But I think if you look at the first 20 years or so of this century, the Chinese technology companies and even the Korean and the Taiwanese semiconductor and memory companies can really argue that they're going toe to toe, and maybe even some might say are edging ahead of their US peers in the 21st century. So I think we're going to continue to see that, but I think investors are prepared and ready. And the other important point is we're seeing huge interest from investors globally of increasing allocations to China, and that's something that's been a significant driver of markets over the last 3 to 5 years.
In Asia, which is your favorite market geographically speaking, Andrew?
Oh, well, it's a tough question whether I talk absolute or relative. I mean, the allocation to China for us is still the most significant market. But at the moment, for my Asia growth strategy, even having 30% or so of our assets in China puts us underweight relative to the benchmark. Where we're overweight, we still like Taiwan, we still like India. And I think, to your point about recovery, India looks quite interesting. It's always been a relatively expensive market. There have been some issues with the financial sector even before COVID. But some of those, private sector banks in India look good in terms of the momentum, in terms of their loan growth and the recovery in the Indian market. And then just very quickly on the Taiwan market, that some of the large caps, which I think you can guess in terms of the semiconductor space, there's healthy competition with America there and some of the US corporates. But the Taiwanese companies very much have a leadership position. And I think, the fact that we can buy that company a little bit cheaper, as we've seen a correction in NASDAQ, also offers good potential. So I think, look, let's be realistic. We had really good returns last year. The earnings growth is still going to be good for Asia this year. And we can still see, a positive outlook in terms of flows, a weaker dollar,